Hello traders everywhere, Adam Houston here, co-founder of Market Club with your 1 p.m. market update for Wednesday the 19th of October. It's the first time since 2002 and the last time since 1987. So what does all that mean? Well, it's the first time since 2002 that Apple has missed its projected earnings. This came as a shock to many traders as Apple has notoriously underplayed the estimates for its earnings. So what does this all mean? Is the Android platform going to marginalize Apple, just like the Windows platform did to Apple in the 1980s and 1990s? That just may be a little too complicated for me to answer, but as always, we'll rely on our trade triangle technology to get it right for us. You know, many traders who were trading in 1987 can still remember the days between October 14th and October 19th, 1987. That's when the major indexes in the United States dropped 30% or more. Let's hope we don't see a replay of that today. There's no question today that the major indices lack any real direction for the moment. However, there are a number of markets that look good to us and other markets like the major indices that have no clear-cut direction. Tune in tonight to Market Club at 5 o'clock and we will be uncovering some of these markets that have clear-cut trends both on the upside and the downside. And the problems, so that's at 5 o'clock tonight. You can call in with your questions and answers. The number is on the screen, 410-867-2100, extension 129, with your questions, and we'll do our very best to get them answered. So if there's a stock or a market you want us to analyze, we'll take a look at it with our trade triangles, and I'll give you my best interpretation. So tune in tonight, 5 o'clock, Market Club TV. You know, the problems in Greece just continue to escalate and get out of hand with more violent behavior. We predict that the protests in Greece are going to get a lot worse before they get better. And there's no question in my mind that Greece is going to default. That's just a given right now. The question is, when will the Occupy Wall Street crowd turn to violence? Now let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So we simply go to our markets and we've got our portfolio up here. You can see the first one is the plus 60. It's the S&P 500, and that is really, look at the action we're seeing in this market from yesterday. Big move up. We've had, actually, if you look at this, it's blue, red, blue, red, blue. What's today going to be? Chances are it's going to be red. I think the market's still at a level with it's going to have problems at. And again, we've talked about this 1230 area as a resistance zone. Certainly we had moves here to, this looks like the 1233 yesterday. We were the day before, we were right to the highs again. So definitely some problems here in this market. It just has problems here, and I don't think it's going to be suddenly washed away. And it depends if you're looking at Europe, you look at it here, it's kind of a mixed bag. But generally speaking, we go down here, the market is overbought, very similar to these periods right here. And also, if you go further down, you can see that we're just starting to flatten out a bit with the MACD. So if we see this turn down, then there's a very good chance we'll see another test of this 1230 area, which is a 61% Fibonacci retracement. Still think that if we come down, it's going to be a lot healthier for this market to come down and then go back up if it's meant to do that. But generally speaking, the longer-term trend based on our trade triangle technology has not changed from 1258.07. It is still negative. Today's action, where we close, is going to be very, very important, because if you look at this market where we closed last Friday, so here we are, we have the Monday, Tuesday, Wednesday. Last Friday was right here. We could actually close lower for the week. That will be quite interesting because we closed last Friday. We closed at 1224.58. We're 1224.86, so we're practically flat on the week. So let's see how this market performs today. Possibly it's going to be a red day because of the 2 preceding patterns we're seeing here, but generally speaking, it's something to be concerned about if we have this tight range here. So let's go to our next market. The next market we're going to be looking at is going to be silver. And as you know, silver, we still are negative on this market. We feel that the minus 80 and all of our trade triangles in a red zone, we think we are rolling over to the downside. And let me just get my telestrator on to share that with you. So we think the market came down. I got to take this off here. So the market came down. And then we've had this sort of rolling over effect. And we haven't seen any acceleration on the downside. And that's going to depend on what happens to probably the S&P 500 and the other equity indices. So this market was down dramatically, came back yesterday, but now we're down again today. So it looks to me like the line of least resistance, at least for the time being, is on the downside. With all of our trade triangles in a negative mode, I think that's the way to bet in this market. So let me clear that screen off again. And let's take a look a little further down here and see what else we've got with our indicators. We're coming from an overbought condition rather, which is a good sign. And you can see also we're kind of oversold, but we're rounding out a little bit here on the MACD. So we're losing some momentum. But I think generally speaking, you want to rely on the trade triangles for this move right here. So next market we're going to be looking at is going to be gold. And the gold market is really kind of same picture there. A little disappointing, I think, but we're getting close to the top of the Donchian trade channel. It's starting to trend down. You see a move down in gold. We've had 3 red days, red candles in gold, and certainly it looks as though it's rolling over to the downside. You can draw a simple trend line, which we can do quite easily with MarketClub. You just click here, the lows, and you can just draw this up, and you can see we've sort of broken down below that trend line, and you could see this as a continuation pattern on the downside. So it looks to me we could get down to the 1600 level, which is right around here, and test that level again. So on the defensive, trading range 55. If we go further down here, you can see that we were overbought. We actually have a little bit of a negative divergence here. Prices went higher, divergences went down. And also on this one, we're starting to roll over a little bit. You see how we're losing momentum on the MACD? So generally speaking, I'm a little bit hesitant to want to be bullish on this market. Longer term traders should definitely be still long this market, but generally speaking, if silver does go down, which we think it will, it's going to drag gold down to a certain degree. So please be careful with that market. You want to be really trading carefully. Certainly if we close down below the recent lows, which is right here, and I'm going to call that around the 1630 level. If we close below 1630, and one of the nice things you can do with MarketClub, and I'll show this to you, is let me just take these off the screen. Easy to do, just click on the little box and it takes them off, and it'll clean this up. But if we just go onto a line chart, you can more or less see this 1630 level is a very, very important level for this market on a close. Basically 1618 rather, that's a low close. So 1627 here, 1637 here. So if we can get below these closes, then I think very, very much we'll see a test of the it'll be a new low close, as a matter of fact. So let's see how we close for the week in this market. And just on a weekly chart, we'll just pull this up real quickly and put a candlestick chart in. So you can see this is a pretty negative week coming in for the month. And this may be, let me see, we closed last week at 1680. We opened this week at 1680.35. So I was going to say it looks like a possible negative engulfing line here. It looks like we made a new high for the week, certainly around the 1694. Last week it was 1691. So it definitely looks like it's a greater week. If we close below the lows of last week, which is 1637, I think this is going to look a little bit negative. We're only about $9 away from there, so really pay close attention. What's concerning to me is the fact that we've got this minus or plus 55, which is a trading range. And again, if we go down here, you can see the weeklies on the MACD are down, and well, we're not oversold yet on this market, so let's pay close attention to that. Sometimes it's very good, and we talked about this before, looking at the weeklies and the monthlies and the dailies to get an idea of where we are in that cycle. So pay close attention to that. Let's go back to our dailies, and then we'll go to our next market. In the next market we're going to be looking at is the crude oil market. Now, this is something I think is pretty interesting I want to share with you. We thought the market would have major resistance at 90. You can see this resistance. It got higher today, went to 89.69, just 31 pips away from or 31 points away, however you want to look at it, from the 90 level, which is major resistance in our mind. All these tops were made around the 90 level, and it would look 90.72, 90.41, so forth. That's definitely an area of resistance. Now, this is going to reflect, or what this market has been doing is just reflecting to a large degree what is happening with the equity markets. Now, again, we could draw a very tight trend line here, and I think we're going to see this market begin to roll over. We're very heavily overbought. Not to say it can't get even more overbought, but it's very heavily overbought right now. And we're just sort of starting to flatten out on the MACD. And obviously on the Donchian trade channel, we're right at the very top of the channel. So it'd be very, very similar. We've talked about this before. When a market goes outside of the channel, it tends to come back in, just like here and here. So I think there's a good possibility we'll see this market come back in and possibly down to these lower levels. Certainly if we put a Fibonacci retracement in here, we're looking for this market to come down possibly to the 80, 50, 80, 75 level. That's a 61% retracement. And there you go. Let's just see what it is exactly rather than just take a guess. 80.66 is a 61.8% retracement. Would not be surprised to see the market come down to this level again. So a lot's going to depend on the equity markets. If we pull back in the equity markets, we're going to see a pullback in this particular market as well. So let's go to our next market, and that's going to be the dollar index. And the dollar index is beginning to act the way we want it to act. So here we are. The monthlies are still positive, 76.61. The market's currently at 76.88. So you can get in actually pretty close to our original buy point on the monthlies, and I think the risk is not that great. Now you've also got this market oversold, potentially with maybe a little bit of a bullish divergence. You're beginning to lose momentum. You see how this is flattening out? Now, if this turns around and goes over the red line, I think we've got another shot of going higher. I think the U.S. is probably the only place you can put money, real money, and have it stay. So I think that's an important level. Obviously, the levels we're going to be looking at is if we pull this back, we put our Fibonacci here. You can see quite easily we go back to the 78.50 level, which we've been talking about, which is 61.8% retracement. Certainly going over this high that we see here is going to be very important, which is 77.55. But I think, generally speaking, I think we're trying to knock out a bottom here, and it looks to me like we're just beginning to round out and sort of round out a little bit to go higher. Certainly we're at the bottom of the Donchian trade channel. As I say, times we've got to the highs, we've come back in, and this is just the reverse. So I think we've gone out here a couple of times. I think we'll see the market pull back, or rally I should say, and go back up to the 78 to 78.50 area, at least in the interim. And that'll give us a better picture of what's going to happen in the future. But generally speaking, our longer term trade triangles are positive, intermediate, somewhat mixed, and the daily are positive as well. So probably a place to get long for a little pop to the upside. So let's clear everything off the screen. Go to our next market, and that market's going to be the Reuters Jefferies CRB index, and this is an interesting one. We talked about this yesterday. We had what we consider to be a fairly important pullback, which is the 50% level, which is right here. You can see it hit the 317.10 level a couple of times. We hit it. Today's action, we actually think we got as high as 317.02. We're trading around 314.50. It looks to me like this is an important high, this 50% retracement, and I think we could see the market pull back again. Now, if we see it pull back, we will be looking for a pullback to possibly the 302 level, 305 area from current levels. I think that's going to be a very, very important area to look at this market again. So the Fibonacci tool is very easy to use. Obviously, you've seen me use it, and I think you'll find it very useful in your own trading. But hey, I'm very excited tonight. We're going to be doing our show at 5 o'clock. You're encouraged to call us in, call in your questions about the markets. If you want to look at a particular indicator, if you want to see us talk about a particular market, we'll be doing that. So 410-867-2100, extension 129. And be sure to tune in. I think you'll enjoy the show time. We're going to be looking for markets that are on the move, on the upside and the downside. So really pay attention. We'll also be looking at the bank stocks and what it means and what's happened this past week. Is Citi out of the woods yet? Is it going higher or is it going lower? We'll be answering all those questions tonight at 5. So stay tuned to Market Club TV. We'll be back at 5. Thanks for stopping by. Have a successful day trading.